Welcome to the latest of the Crystal Zoom webinars. Today we're here to talk about complex buy-to-let, and I'm delighted to be joined by a plethora of complex buy-to-let experts. We have Paula Priest from Foundation, Paula Purdy from Together, Louise Apollonio from The Mortgage Lender, and Ian Scarrot from Precise Mortgages. I'm also delighted to say that today's live Q&A will be hosted by our very own Jason Berry. But first, my name's Chris Corns. I'm the Operations Director here at Crystal Specialist Finance. And as mentioned, stay tuned to the end. We have a live Q&A at the end of the video. There is a Q&A button on your app or on the screen at the bottom. So click on that, ask your questions, and we will endeavour to answer them all at the end. So a little bit about Crystal Specialist Finance. We specialise in specialist. So for us, bridging, buy-to-let, commercial, development, seconds and residential are our key areas. We are dedicated to the intermediary. We're obsessed with service, and we are a multi-award winning business. We've been running now for over 40 years. We've got over 80 lenders on panel, over 30 staff members currently working, and over 200 years combined experience within the business. There's a few of our recent awards that we are extremely proud of, including most recently there, the Mortgage Awards winner for Best Short-Term Lending. We've got the FRA for Best Short-Term Lending Broker and Commercial Finance Distributor of the Year from Business Money Facts. And it's not just about business, of course. In these difficult times that we find ourselves in at the moment, mental health and mental well-being is a very important factor. So we've partnered up with Mind, a leading mental health charity, and we're providing advice. We're holding events over the next 12 months that will maintain the profile, that will raise this, will get people thinking about things a little bit more, and hopefully will help put people in a better frame of mind. As part of that, we are running a campaign at the moment that you will receive from us a stress relieving amethyst crystal if you complete a case with us before the end of the year. So certainly get submitting your cases. We've sent out a number of those already. They're going down really well in the industry, and obviously get one of those for yourself before Christmas if you can. In the times that we're in at the moment, things are a little bit more difficult out there. I mean, we can't shy away from that. Things are taking longer with a number of lenders, or with valuers and with solicitors. But there are a number of things that you can do to ensure that your case moves quicker. So firstly, let's ensure that as much information as possible is provided to us and or the lender. Let's provide all relevant information from the start. It will get found out later on, and it just holds things up if we're waiting for that to come further down the line. Manage expectations with your client. If things are going to take a couple of days to get resolved, or for lenders to look at them, or for valuers to go out, then it's important that we're having those conversations up front, and we're not setting everyone up to fail by over-promising at the very start of the transaction. If speed is an issue and the client does have a fixed deadline that we need to work to, again, let's have that conversation early, because we might have to change the route or the type of loan that we're looking at in order to accommodate that. Ask the client as many questions as you can, or as you normally would at the start. Obtain all of your ID documents and other materials that you think will be relevant. You'll still be fact-finding your client generally. You'll still be understanding their needs and their wants and their requirements. So it's no different to a normal transaction from that point of view. So get all of that as you would do normally. And then finally there, it seems obvious, but be quick to provide any further information or documents when they're requested. Again, you'd be surprised how many times on the day of completion we're still waiting for clients to send items in. So the process for submitting and processing a complex buy-to-let application is no different to what you would expect normally. So once we receive an application, the first thing we do is work towards getting that decision in principle from the lender as quick as we can. Once that's done, it's then moving to full application. Full application then leads us on to valuation. Once all of that's back, then typically you get to lender assessment. If the lender is happy with all of that information, they issue the offer. And then it's down to the solicitors to complete that transaction from there. Now, different lenders will have slightly different variations of this process, or do things in a slightly different order, but fundamentally that's the process that most of them follow. One of the big differences with Crystal is that we will work with you beyond that legal offer as well. So when the solicitors are working on the transaction, we still get involved there, and we can try and iron out any issues or keep the relevant parties talking and moving forward. And there's a few commission examples on the screen at the moment. Obviously, bridging we can complete very quickly, and a few assumptions based on loan size and typical commissions. But as you can see, specialist finance is certainly a lucrative area, and it's an area we recommend all advisors are getting involved in, not only from an income point of view, but also to properly help your customers and make sure that they've got the right solution. Most of you will do buy to let already, and the market is very well catered for by the majority of brokers. We're interested when things get more complicated. So here we're talking about limited company transactions, HMOs, mixed portfolios, adverse credit, things that are generally more time consuming and more difficult to place. It's things that fall outside of that mainstream remit. We've seen most transactions. I'm not saying we've seen everything, because I don't think anybody in the industry has ever seen everything, but we've seen the vast majority of issues that can crop up on cases. For us, specialist is normal. We don't tend to do the vanilla buy-to-let, your 1.8s, 1.9s with the mainstream lenders. For us, it's the unusual ones, it's the quirky ones that we get involved in. And there is a lot of crossover between sectors. The majority of things are catered for very well in the mainstream market, but there's a lot of crossover between that and specialist. And as you can see there from rates in the vanilla end, 1.8, 1.9, wherever they are in the market at the moment. Specialists, they start from 2.99 and they work their way up from there. So in that middle section, the bottom end of your vanilla and the top end of your specialist, there's a very big crossover between rate and opportunity. So it's certainly worth looking at the gaps there. What's a normal transaction for one of the lenders on the call today might be a very difficult transaction for one of the more mainstream vanilla lenders. So here we're talking about things like low personal income, we're talking elderly applicants, large portfolios, HMOs, semi-commercial, and they'll all fit within that diagram in different areas dependent on the individual circumstances. But specialist is certainly an area that people should be looking at a lot more. Rates from 2.99, LTVs now go up to 80%, loans from 25,000 upwards, and there's a few USPs that you can see on the screen at the moment. So the things there that you'll come across in your day-to-day life, your day-to-day broking, that we can certainly assist with. HMOs are still a big area currently. Investors are still keen, lenders are still winning. Obviously, we just need to put a COVID hat on and just ensure that these transactions still make sense. Due to the COVID pandemic, maybe less demand for student accommodation or people looking to find spaces away from home. And again, social distancing, rule of six, etc. Demand for that property type may be seeing a drop off. That said, lenders will still look at them. They'll just do a bit more due diligence around the area and around the use of that property as a HMO. Limited companies, still very popular. Lots of things to consider when you're doing a limited company transaction. Again, the market probably thought there would be more of these than there were, but there's a lot of individual factors to look at. A one-size-fits-all approach certainly does not work in that environment. It's about understanding the needs and wants of your customer and making sure that we get those accommodated properly. So things to consider include the current tax position, the longer term implications, the availability of products, obviously, but also the primary business plan. Buy-to-let is now considered a business rather than a hobby. So what's the purpose of your client getting involved in buy-to-let? Is it monthly rental collection? Is it property accumulation? Is it buy, improve and sell? All of those have different needs and different tax implications. So our advice there is to team up with a good accountant and make sure your clients are protected. You wouldn't want other people giving mortgage advice. Most brokers aren't set up to be tax advisors at all. So it's very important we don't overstep the boundaries and we do get them teamed up and signposted to the right places. Stamp duty is an excellent opportunity currently within buy-to-let. There's been an announcement over the last couple of days that the government may consider extending the deadline. We will have to see about that. But as it stands currently, it's up until the 31st of March that there is a stamp duty holiday. Now, what that means for buy-to-let investors is that you only pay that 3% surcharge. You don't pay the 3% plus the stamp duty. So as an example on screen at the moment, if you buy a property that's just under that threshold, so 499, previously you would pay 29,920, you'd now pay 14,970. So you've saved yourself just under £15,000. So it's certainly worthwhile jumping on that bandwagon if you are looking to buy properties and getting involved now. There's some updated buy-to-let case studies here. I thought it was important that we show you transactions that are completing now. The top one there, limited company was purchasing their first buy-to-let properties. They're 3 new build flats on individual blocks, 250,000 each. These completed at 2.99% with a lender fee of 1,999, 75% loan to value, and these completed in October of this year. We then had a scenario where a client was transferring property into a new limited company. They owned a large portfolio. Their accountant advised them to purchase a few of them in the new limited company now. Obviously, deposit, capital gains, etc. all needed to be considered and stamp duty. However, on his advice, it was the right thing to do for these 3 properties. 3 completions there, 82,500 each, a rate at 3.24 on a 2-year fixed, each of them up to 75% loan to value, and these completed at the end of September. And then a client had purchased a new residential property, kept his home, which he decided to split into 2 individual self-contained flats. This had the impact of increasing the value of that property up to 940,000 when the valuer went out, and rent coming in of 40,000. There was a little bit of like adverse, which complicated this one slightly. Missed credit card payment, a couple of missed payments on public utilities, and then some older unsatisfied defaults. That said, this completed at 65% LTV, which was what the client wanted, 5-year fixed at 3.94, and this completed at the end of August this year. So as you can see, the rates there aren't particularly horrendous. You wouldn't think of these as being particularly high or specialist, but the scenarios for each of them all push them into the remit of specialist finance. So it's something that fell really nicely within both our sweet spot and the sweet spot of the lenders that are going to be talking to you very shortly. So the key thing for us is let's have a conversation. So we've got our BDM team, we've got our new business team, our underwriting team that will discuss your transaction with you as early in the transaction as we can. What we want to do there is we want to understand both the transaction, but also understand the problems that you're having with it. It stops us then repeating work that you've done or running into the same problems further down the line. So you can get in touch with us many ways: email, you can go onto our website, you can give us a call. We've got many live events like this that we do. We've also got callbacks, various video meetings, various different things that you can do to get in touch with us. Once you've had that conversation, we then go away and source a deal for you. So our team will then find the most competitive, the most relevant terms for your individual client circumstances and get those sent across. You discuss that with your client. If they're happy to proceed, fill in the application form and send the case in to us. At that point, our processing team then start doing everything we looked at earlier. So at that point, we'll move towards the DIP, we'll do the searches, we'll get the application in, we'll handle the valuation, the offer and the legal work. And then we'll work with the solicitors in order to get that case fully completed for you. So hopefully that process isn't too difficult, isn't too different to the one that you work with currently, but it's just that initial thing. That conversation is essential for everyone to understand the deal, everyone to be on the same page and ensure that we can get this right first time. So that concludes my brief presentation for you today. So thank you for listening. I'm delighted to now hand over to Paula Priest, National Account Manager of Foundation Home Loans. Over to you, Paula.
Hello, and my name's Paula Priest and I'm National Account Manager from Foundation Home Loans. Today, I'd like to speak to you about Foundation Home Loans and how Crystal and Foundation can help you place buy-to-let and residential cases. So just a bit about Foundation Home Loans. We've been trading since 2015 and we're very innovative in our approach and vision when it comes to specialist lending. The great thing for you is that we work with Crystal and we're pro-intermediary. We don't accept business direct from the consumer. Crystal help us work together to build a case that will actually fit for you and your customers. Since launching as Foundation Home Loans, we've seen year-on-year growth of 40 to 50%. We've seen 4 successful rounds of securitisation and we have a warehouse facility over £1 billion, so there's no shortage of funds to lend. We focused in recent years on portfolio lending, limited company buy-to-lets, short-term lets, multi-unit blocks and HMOs because it's a very underserved market and one that we've become really well known for. However, we're also now focusing on residential lending, and during this presentation I will let you know how Crystal and ourselves can help you place business that falls off the high street. So first of all, limited company buy-to-lets. In 2007, this market was worth a staggering 46 billion and the market fell to about 9 billion in years 2009, 2010. We were forecast to do about 36 billion this year. And despite everything that's happened with COVID, it looks like we won't be far off. In fact, we're going to overachieve on the business volumes that we predicted for this year. And a lot of that is on the back of the stamp duty changes that have seen a massive surge in property purchases. The market has become so much more professional over the years, and the great thing is that these landlords can only access these products through yourselves, as I've already mentioned. So why do people come to Crystal and ourselves to place limited company business? Well, the first thing is that we don't have any minimum income. However, they have to have an income. Obviously, they need to be able to look after rental voids. And about 1 in 5 landlords saw rental voids during COVID. We've got no maximum time in employment or self-employment. They just have to be employed or self-employed. The great thing about foundation is there's no maximum age. So you can have an 85-year-old go for a 30-year-old mortgage if you wish. And the great thing about that is that it really helps with inheritance tax planning moving forward. And the reason is that you can have up to 4 directors, but you can have unlimited shareholders. As long as the shareholders are 19% or under, they don't form part of the application process whatsoever. As far as limited companies go, if we go back to 2015, about 10% of all applications we saw coming in were on a limited company basis. Last year, 2019, that increased to 55%. And if we have a look at the overall purchases being done now, that exceeds 79–80% with foundation home loans. So there's a massive market there for us. We can also help you with your portfolio lending. We have no limit to the size of the background portfolio. However, 3 million with foundation. We can look at excess of this, but you'd need to discuss that with Crystal, who would then speak to Keith Jones, who is the business development manager that manages the account on behalf of Crystal. We don't make it complicated for you by asking for business plans or asset and liability statements. And let's face it, most landlords would only get one of these done to get a mortgage anyway. If there's more than 10 properties on the property schedule, you can send us the spreadsheet and we'll actually complete those for you. One of the main things that I love about foundation home loans is that once we've assessed the first property in a portfolio that you're looking to bring over to us, then that assessment is valid for 6 months, meaning you can add to that portfolio up to £3 million over the next 6 months without any further underwriting. We just go straight to valuation. Again, speak to Crystal and they'll let you know how we can do this. We're also a lender that considers portfolio income as a sole income. We can look at day one remortgages as an exit offer bridge. And if somebody's owned a property for over 6 months, we will value on the true market value and not the purchase price. Again, speak to Crystal, who'll be able to help you. We can help you with short-term lets, Airbnbs, holiday lets up to 75% loan to value. These aren't for holiday homes where they're to be used as a second home. This is purely for all the landlords that are looking diversifying, obviously to get higher rental yields. So why would somebody want to do a limited company buy-to-let? Well, in scenario 1, and we're going to have a look at 3 illustrations here for you, you've got Mr. and Mrs. both have an income and they've got savings. They wish to buy a property as an investment vehicle and they set up an SPV with one of the 3 relevant SIC codes. As long as the kids are over 18, they can actually add them at 19% shareholding without having to add them to the actual application. So this is a really good tool that can be used to start inheritance tax planning. In scenario 2, you've got a high rate taxpayer and somebody that doesn't earn an income. They're looking at remortgaging their residential because they want to buy an investment property and they set up an SPV. Both as equal directors However, obviously, because the applicant one is a high rate taxpayer, they want the income to go to applicant 2 so they can utilise the nil rate tax band. You could actually do 100% shareholding for applicant 2 if you wanted as well in that scenario. And scenario 3, you've got a trading company here, which is Coleman Cars. They've built up some cash within that business and they want to do an intercompany loan so they can take the money out of the business without paying tax on it and set up a non-trading SPV to actually buy property. Remember though, we're not tax specialists or accountants, so we can't give advice. This is purely for illustrative purposes. Another way that both ourselves and Crystal have seen a large increase in business is through HMOs and multi-unit blocks. In fact, 1 in 5 of applications that we receive now come from landlords that are looking at diversifying again into this area to enjoy higher rental yields. We can do HMOs up to 8 bedrooms, multi-unit blocks of 10 units under 1 freehold with a minimum of square metres per unit. To do a HMO or a multi-unit block, you don't need to have experience of letting these properties. You just need to have 1 month's rental experience to be classed as what we call an experienced landlord. And again, Crystal can help you place those cases. And we can also look at doing these off a bridge as well if required. Residential is another massive area that we've gone into, and what I thought I'd do is I'd let you know how Crystal and ourselves can help you place some of those cases that actually fall off the high street. So first of all, we can help you with all those complex income and complex employment cases. It could be that there's both a mixture of complex employment and complex income. We can look at people with credit blips. We're not majorly into the adverse side of the business, but we can have a look at credit blips if somebody has had those. We can look at up to 80% loan to value for 4 applicants or 75% if you're actually going to be using the 4 applicants. 80% loan to value for debt consolidation, and we've got no debt to income ratio. So theoretically, you could have somebody who's got a £30,000 income and £40,000 worth of debt. A lot of the high street lenders would look at declining that because the debt exceeds the income. Foundation can help you look at placing those cases. We'll look at first time buyers, again up to 80% loan to value, up to a maximum term of 40 years. We'll look at interest only with sale of property as the repayment vehicle, as long as there's £150,000 in equity in that property or 200,000 outside London and the South East. We'll look at true pound for pound remortgages with no maximum income cap, as long as they fit our affordability. Again, speak to Crystal, who will be able to help you. There's a number of repayment vehicles that we can have a look at, including investment portfolios. We can look at taking a certain percentage of cash that you can commute out of your pension, endowment policies, investments that you've got. Again, speak to Crystal, who will be able to help you. They've got a dedicated account manager that gives them one-to-one and actually looks after their processing for them. If you're looking for a lender to lend you 100% of bonus, overtime and commission, as long as we can show that that has been paid on a regular basis, then please do consider us as one of those lenders. If you get any unusual income types, for example, stipend income, or you've got those lovely nurses that are just doing bank nurses, we can look at 100% of that income. Or if they're a nurse that's employed, we can look at 100% of their salary and 50% of that banking income. We'll look at 100% of trust and investment income plus rental income, net rental income. 100% of income from property and land. If you've got any income from income protection policies or family income benefit policies, we will look at 100% of maternity and paternity pay if we've got a date that they're confirmed to go back to work. Maintenance court orders with 12 months or 12 months proof of payments. So any of those cases, low credit scores, please do speak to Crystal, discuss the case, and they will be able to tell you if we will be able to help you. So I'd like to thank you very much for your time today. As I say, we work really, really closely with Crystal, and if you have got any questions, please let me know.
Thanks, Paula. Great presentation as always there. It now gives me great pleasure to hand over to another Paula, Paula Purdy from Together. Thanks, Paula.
Good morning. I'm Paula Purdy, Regional Account Manager for Together. This morning, I'm going to cover off a brief presentation which talks about our back to market message, our 3 values in terms of our products and some of our USPs. We're going to have a look at buy to let, and in particular some of the complex buy to let and what makes us different, and a summary. So as I'm sure you're aware, we relaunched to market on the 14th of September. We have relaunched with a much more simplified product range, much easier for you as the introducer to understand. Also, we looked at our distribution model and we made a decision that it was best to return to market with a limited panel of brokers. And I'm delighted to say that we're working with Crystal, who are very experienced in working with us, have an excellent relationship and knowledge of our products, and have direct access into underwriting. So a very strong business partner for you today. What I'd like to talk about is some of the 3 main areas of value that I think make us a little bit different at Together. So if we look at the first one, status. So who would we lend to? So what sort of clients would we consider? So we will look at clients from the age of 18 to 80. Now we can look on the buy to let at lending to somebody above the age of 80. It could be somebody 90 plus, provided the case is self-financing. So we're not having to use any of their outside income. We'll also lend to individuals, sole traders, LLPs, partnerships, limited company and portfolio landlords. So as you can see, we can really consider any type of application that you may come across and you wish to submit. Also, in terms of status, we appreciate that sometimes clients can have a credit blip. So what we would do at Together is we don't actually credit score any clients. It's just based on their credit search and anything that comes up in terms of their credit profile. So what we would be looking at is we only concern ourselves with anything registered for the client in the last 12 months. So generally speaking, anything over 12 months is ignored. So again, it just would be anything registered in the last 12, and we would price according to our risk and the client's profile. With regard to income, I think we have quite a unique way at Together at assessing income. We will look at all sources of income for the clients. We don't have a particular area of income that we won't consider. So as long as it's provable, we can consider that income. So what we would be looking for is it could be somebody who derives their income. It could be from a pension. It could be from property. Maybe they have a portfolio. It could be that they're partly employed or self-employed. It could be that we need to use projected income. So whatever the situation is, and provided that income is provable, we can consider to lend against that net figure. What I would say to you on projected income, obviously there's some challenges with COVID and England obviously in a current lockdown. It's the type of business and it would be having a better understanding of that business. I had a conversation with a broker yesterday regarding an Indian restaurant. The client has had a lease for that property for the last 10 years, and the landlord has come along and given him the opportunity to purchase that property. And prior to the last lockdown, he actually converted it into a takeaway business and has been doing extremely well. So it was something we could consider because the accountant could confirm what actions he took as a result of COVID. And in fact, this business, now that it's a takeaway, is actually turning over more profit than it did as a restaurant with the limited number of covers it could house. So it's actually a stronger business now as a result of COVID. So for a business like that, understanding it, the accountant giving us some narrative and us understanding how they're going to work now with the challenges of a second lockdown. Likewise, if at the moment, given the situation, we were approached with a pub or a restaurant, again, it would be understanding that business. Some pubs, I think, anticipated that the second lockdown would come, and they have applied for Uber Eats licenses. They've got different options available to them in terms of income. So it's understanding those businesses. And it can be a challenge just with COVID at the moment and the lockdown, but we can, if we can understand the business and the commentary there and the figures are there to support the application from the accountant, we can consider it. I think it's no secret in the industry that we're very flexible in terms of property type. So what type of security would we lend on? So you can see here a selection of properties. So we've got your straightforward residential, perhaps an Airbnb, semi-commercial, so maybe a shop downstairs with some living accommodation above. And we've got a block of flats there, quite a number of stories in the block. We've got a livery, land on its own, restaurant and pub, we've just talked about that. And also in the top right-hand corner there, we have a concrete construction. So we have an unusual construction, and we are very good at considering your non-standard construction. So if you've maybe got something that's part concrete, part timber, it could be a wimpy no fines where most lenders don't like it, we can consider those as well. Also, what I would say is I get a lot of inquiries for just a bog standard property, might be just a straightforward terrace property, buy to let, but the property is maybe opposite a garage or a pub or next to a commercial unit. That isn't an area of great concern for us. The valuer, when he will look at the property, he will take into account in his figure the surrounding area, and we base our lending then on the figure provided by the valuer. So the fact that it would be near commercial or anything would not be of concern to us. So let's have a look at the buy-to-let in a little more detail. So we offer both regulated and unregulated buy-to-lets. So the consumer buy-to-let is a maximum of 60% loan to value. There's no ERCs, and the affordability is based on rental income. We aren't able to take any outside income on the regulated side, so it needs to purely be able to self-finance. For the unregulated, we can take personal income into account. So as I've mentioned in one of the previous slides, all the varying types of income we can consider, we can take that net figure for the client and use that to top up the affordability. So if the rent isn't quite meeting the mark, we can consider that as well. Also, we will look at HMOs, and we are slightly different to a lot of the competition out there. We don't have a maximum number of rooms in the HMOs, and you could also be a first-time landlord looking to purchase an HMO. Again, some of the competition are very nervous where being a first-time landlord and your first property is an HMO. Some of the lenders will not consider that because they don't base it on the fact that you've got any previous experience, but we have no issue. Also very strong for holiday let. So if we've got a client who's looking to purchase an existing holiday let business that's trading with accounts, etc., and we can have some figures on that from an accountant, that's absolutely fine. But it could be likewise a client would like to buy a property perhaps in the Lake District and then rent that out as a holiday let, but it hasn't had any previous experiences running like that as a business. We can base the lending then on the client's own personal income. And as we've already discussed, we would take the net income, and in a situation like this, we'd take 50% of it, and then we would deduct any secure payments that they have to make. And provided there's a surplus there to cover our payments on the new loan, then we would be fine to move forward with that. So again, on the holiday lets, we try and use a very pragmatic, common sense approach, and there is no point basing our lending on an AST because it wouldn't work on that basis for a holiday let. As we said, first-time buyers, first-time landlords, no issue with that, and we don't load rate or anything on that basis. We're also very strong for foreign nationals and expats. We see quite a lot of that type of business, especially just at the moment. I think the market has shifted and not an awful lot of lenders are particularly wanting to consider that. What we would look at is loading our standard rate, which is currently 6.99 by 1% for any foreign nationals and expat cases. We also base our ICR on the pay rate. So if the client's pay rate is 6.99, that's what we will base the ICR cover on. Also, we can consider in occasions when necessary projected rent. income. So say a client is looking to buy a buy-to-let, but there won't actually be a tenant in place on completion, but there will be somebody moving in within a short period of time. It might be a couple of weeks. Then we can look to consider some projected rental. So we would base that on 90% of the projected rent. We wouldn't, given the COVID situation at the moment, look for it to be a long-term situation. So it'd be very much that the client is going to have an AST in place or even can prove the AST with a date. It isn't something, given the current challenges surrounding COVID, that we would want to be for a long-term solution. I'm delighted to share with you this morning our buy-to-let exclusive with Crystal. It has a rate of 4.99 for loans above 200,000 and 5.49 for loans below 200,000. So as you can see, for anything over 200,000, it's actually 2% below our standard rate. It's maximum loan size of 1 million and a maximum LTV of 70%, and that 70% is available at both purchase and remortgage. And this product also can be used for holiday lets and HMOs. I know some lenders will bring out exclusives, but it is limited on certain properties. But I'm delighted to share with you that this is available on holiday lets and HMOs. And again, it's available to expats and foreign nationals. Just as it is with our core range, we would be looking to load that rate. So if it did qualify for the 4.99 for an expat, the rate would increase to 5.99. Again, the ICR cover is based on the pay rate. And delighted to say it's available through Crystal and is proving actually to be a very popular product, as you can imagine. I also think it's a very good product for, say, customers who have maybe entered into a bridge or done a little bit of a development route with the property and now looking for an exit. I think it's very strong at 70%, and at that rate, it makes it quite a strong product in the marketplace. So just to summarise, I think there's 3 key areas, just as we started with our 3 values in terms of how we assess an application. There's 3 key areas for you as the broker to, I think, bear in mind as well, which is speed and service. I'm delighted to say our service is outstanding at the moment, and I can say that with confidence. We are turning cases around, and our SLAs are very quick indeed. I talked recently about some bridging cases that we completed within 3 hours from the application being received and the funds being issued. It's equally speedy on some of the buy-to-let and term cases. So you'd be looking on some occasions from start to finish on a case within sort of 3 to 4 days on a buy-to-let. So very strong indeed. And I know somebody rang me yesterday, was delighted because the whole process on a purchase, which is pretty unheard of, had taken less than 2 weeks, so they were delighted. Flexibility is key, and I think, as you can see, we've talked about all the different areas in terms of status that we'll consider, how we'll be flexible in looking at the income, and also the different types of security. I think in the buy-to-let market at the moment, there's so many different types of properties that clients can consider buying, that it's great to be working with a lender who has a flexible approach to all those factors that might need to be considered. And obviously, last but by no means least, the certainty of funds. We are a lender who's very experienced in the specialist sector, and we are delighted to be able to fund so many deals and support so many clients with their onward purchases. And, you know, to be particularly working with a packager like Crystal, who have such a knowledge of the specialist market and such a strong relationship with us, you really can be confident of working with the right partner. But thank you very much for your time, and I'm happy to answer any questions.
Thank you for that, Paula. Really interesting as always. I can now hand over to our third presenter of today, Louise Apollonio, National Account Manager from the Mortgage Lender. Thanks, Louise.
Hello everybody, my name's Louise Apollonio. I am one of the National Account Managers here at the Mortgage Lender. Thank you for tuning in today to Crystal Specialist Finance Complex Buy-to-Let series. We'll be going through the presentation and looking over the buy-to-let market and also where we can help here at the Mortgage Lender. I just wanted to start this presentation by saying thank you, really. Thank you for the continued support from Crystal Specialist Finance and also brokers as well. This year has definitely been an interesting year. You know, the last 7 to 8 months have been challenging at times as well. We've had record months over the summer months, which has been fantastic, and you know, we couldn't have done it really without the support of all of our partners and brokers as well. So just a little thank you from us for the continued support that we've received. So let's have a little look at the agenda. So first of all, what we're going to be doing is we're actually going to be taking a little look at what's happened in the market really since lockdown number 1 in April. So what's happened in terms of the market and also the appetite from landlords in terms of purchasing further property, and also the general market movements as well in terms of products available. I think now is a more important time than ever for advisors like yourselves to be able to support your clients in their transactions. So we'll have a little look over that. We'll move on to having a little look at how we can help here at the Mortgage Lender, some of our popular products, and also areas of criteria that we know at the moment we've been able to help people, particularly over the last sort of 7 to 8 months as well. And then we can finish with any questions that you may have. So let's take a little look at broker activity over this year. So what you can see here is a table which shows the total buy-to-let illustrations that were generated through 27 Tech. So in the first column, you've got all of the buy-to-let illustrations, and as you can see, the year started off very, very well. We were looking at anywhere between 35,000 and 38,000 in terms of total buy-to-let illustrations across the whole entire market. Now, you can see in April and May, those figures naturally drop quite significantly as well. And actually, we were in the very fortunate position back in April to continue to lend. So we were one of 3 lenders that were able to continue to lend right throughout the pandemic for buy-to-let lending, which was great. So we'll be able to support brokers all the way through with quite a consistent product range as well, which has been fantastic. And then in June, you can start to see the recovery in the market, and actually quite a quick recovery, jumping back up to January's levels in terms of total buy-to-let illustrations. And that's just grown month on month, bar a slight dip in August, which is usual for that time of year. And now looking into September of over 38,000 buy-to-let illustrations. And I think what the really important thing to look at here as well is the actual specialist buy-to-let illustration volumes as well. So earlier on in the year, the specialist buy-to-let illustrations accounted for around 15% of all illustrations on the buy-to-let side of things, whereas now what we're seeing is those numbers are following the same pattern. The growth has come again since June, and actually now we're in a position where the specialist buy-to-let illustrations are now accounting for over 20% of all illustrations. So it just goes to show that the advisors like yourselves are looking at specialist lenders like us who can take a view on properties and look at those more complex buy-to-let cases as well. So we've had a little look at the broker activity as we've looked at the illustrations that have been generated through 27 Tech. This slide actually looks at the actual buy-to-let mortgage product availability. So again, a really, really interesting picture here. You can see the difference from March through to September of this year, and just the sheer amount of additional products that are now available across sort of 2 and 5 year fixed products. So I'm not going to drill into the numbers, but really it's just to show you the scope of how many products are out there, the appetite that buy-to-let lenders have at the moment, and also the importance for advisors. You know, there's never a better time to get in touch with your clients to make sure that you can help them with any future purchases, or it's just a good time to revisit your landlord clients. There's a huge opportunity out there for some really great products with some great criteria, both in the mainstream and the specialist space. And this is a time more than ever that clients need advice from advisors because of the sheer volume of different products and criteria that's available in the market at the moment. So what are investors looking for? So we're all aware of the stamp duty changes and the fact that those are due to come to an end on the 31st of March next year. There has been some speculation with the furlough scheme being extended, whether or not this is something they'll look to do with this scheme as well. But at the moment, as a lender, we're obviously working towards the 31st of March. So we are asking brokers to be realistic in terms of timeframes. You know, as a lender, we're doing lots to ensure that we're helping packages, brokers to get all of the documents to us in time for that first underwrite. It's really, really important that we can get those cases offered as quickly as possible, because it's not just our timeframes as well. Obviously, there's pressure on valuers to get valuations turned around quickly, but also from conveyancers, from local authorities in terms of searches. So really, we're asking, get those cases in ASAP. Really, around now is the time to definitely be getting those cases submitted to encourage and ensure, that we can get those cases completed for you by that deadline of the 31st of March. So investors naturally are looking for yield on their investment, taking advantage of low historic interest rates as well, which is fantastic. And what this slide shows as well is the top 10 highest yielding areas across the UK, with the average it being at 5.2%, but you can see there the list of the highest areas across the UK. That then translates into the top regions as well. We've seen an increase of landlords looking to the north of the country, where property prices are lower but the rental is higher. The City of London providing a rental of 3.1%, so quite a little bit lower than the average, but that's not to say that we can't help with those cases. But like I say, interesting to see that the top areas there across the UK. So now we've had a little look at the market and the changes that we've seen during the pandemic. I just want to move on to some of the criteria and products where we can help in terms of your clients. So just some criteria points for you. So we currently lend in Scotland, England and Wales up to 75% LTV. So all of our products are available to individuals, but also limited companies as well. And that's also including our expat range. Now, in terms of our expat range, there are slight differences in terms of income amounts, but we do offer an expat range of products. From a minimum loan point of view, our minimum loan is 25,001 and our maximum individual loan is actually 3 million. We do also have a large loan proposition, which I'll touch on later on within the presentation. A really good area for us is our minimum property value of 50,000. So you saw from the previous slide there the highest areas in terms of rental yields. So a lot of those being across the north of the country. So actually our minimum property valuation sitting at 50,000 is fantastic. A lot of lenders will tend to kick in around sort of 75,000. So the fact that we can look at those lower value properties that have the higher yield is great. We do also have a minimum property valuation that's slightly different for HMOs and multi-unit blocks, and also properties that are within London and the South East. So that's up to 120,000 or minimum of 120,000. So we're not looking for a minimum income for landlords. We just need to know that there is some earned income. Now that can come from employment, self-employment. It can just be a portfolio landlord, as long as there is some earned income there. And generally what we're looking for is the tax status of the applicant, so we can then apply the correct ICR for the affordability. So no minimum income at all required with us at the mortgage lender. So if some of you have used us in the past, you know that just at the start of the pandemic, one of the changes that we did have to make was capping capital raising at 65%. So I'm pleased to say that we changed this back up to 75% a couple of weeks ago. So we're able to do buy-to-let remortgages now up to 75% for capital raising. And all we say is if the capital raising is above 150,000 or 50% of the equity in the property, the underwriters may want to see proof of any ongoing onward purchases, just so we can get comfortable with the case. But anything below that, we're not looking for any proof at all. So also another area that proves popular on our criteria is the fact that we don't class communications or utility defaults or arrears as impaired credit. So regardless of how much or when these arrears were registered or the defaults, we're not going to class those as impaired credit. So we will completely ignore that in terms of our underwriting process. So let's just take a little look at portfolio landlords. So this is a huge area for us, and we do support lots of portfolio landlords in being able to increase their portfolios. We no longer look at the maximum number of properties with us. What we're looking at is a total aggregate borrowing for the applicant. So we're now able to go up to £5 million in terms of aggregate borrowing for each applicant. We don't limit the number of properties in the background. So for those portfolio landlords that might have 10, 20, 100 properties in the background, we don't have any limit on the number of those properties in the background. And also what makes us a little bit different is we have a specialist portfolio underwriting team. Now this team is made up of members that have all actually been brokers before themselves. So they really do understand the complexities of portfolio landlords and how to look at that portfolio to ensure that we are making the right decisions in terms of assessing that. So we do have a specialist team that can guide and help you along the way as well once you submit the case over to us. So some other areas of our criteria, so HMOs and multi-unit blocks. So we can now look at HMO houses and flats, and also multi-unit blocks where there's separate self-contained units within or on the same freehold. Another area for us where we see a lot of business coming in is properties above commercial premises. So generally what we say with properties above commercial premises, we're looking at an absolute maximum of 75% LTV. And we generally look at these on a case-by-case basis. And what I would say is these are the times to either pick up with our sales hub, which is on the main head office number, or make contact with your local BDM. We do really have a great appetite for properties above commercial, but it will be based upon the individual circumstances of that particular property and the area of the property as well. So what kind of fits one might not fit another, but we'll generally look at the case as a whole. You know, we have been able to lend above a bar in Leeds, a bar and restaurant in the centre of Leeds. We've been able to lend above a laundrette down in central London, and there's lots of different property types or premises, where, you know, on the face of it, probably the advisors thought that it's not something we're going to be able to look at, but we've been able to take a view on that. So this is the time that I would say pick up with either our sales hub or your local BDM to discuss that case. What we will do is we'll find out some more information. We'll be able to put that over to our underwriters and come back to you before the case comes in with an idea of if it, you know, whether it's a property that we're going to be able to help with or not. So from an affordability point of view, our affordability is either worked out 125% of the pay rate on a 5-year fix or stressed at 140%, and that will depend on the tax status of the applicant. Also, our limited company buy-to-lets are stressed at 125%. We have a wide range of products, but rates starting from 3.13% on a 2-year fixed. Right, so what I'd like to do now is just have a little look at some of our popular products. So I've just touched on some of the criteria elements, and actually with the buy-to-let enhancements that we made back in February of this year, we actually introduced a new product, which is our large loan proposition. It's actually proved very, very popular since launch in February, and it is specifically designed for those larger loans, so loans above 500,000. So we have two different options there. So there's a up to above 500,000 up to 750, where that's got a 0.5% completion fee, and then we've got an option for any loans over 750,000 with a 0.75 completion fee. And actually this has made a real big difference for us in terms of the overall cost over the fixed term period as well. So again, a popular product at the moment out there with brokers. And also, as we've had an increase in our portfolio lending, we also had the new product which we could offer to those clients as well, which is fantastic. So the multi-loan proposition, which we did already have back in February, but we just made some further enhancements too. So ideally this is aimed at clients that have two or more properties that they're looking to put with us. So initially they'll submit the case to us on a standard product, and then subsequent cases can come in on the multi-loan product where there'll be no additional administration fees. We've recently launched some new products on our buy-to-let proposition. So some of these are more rate driven in terms of changes. So we've got a special edition 5-year fixed rate product that's been launched with a 1.5% fee. That's available to all individuals and limited companies as well. And we've also launched what we're calling a mini MUB product. So this is a product that's designed for up to 2 units only. So ideally for somebody that's maybe bought a house and they've converted it into 2 self-contained flats, or a similar scenario to that. So up to 2 units only. And the idea of the product is that basically there's a lower initial rate and also a lower completion fee to our standard multi-unit block products as well. These can all be found on all of the sourcing systems at the moment. So if you're sourcing any cases at the moment, that all these new products are in there and should be showing up for you. So if you're not already registered with us, we do suggest that you go onto our website. There's a register now button. You will need to register directly with us to be able to transact business. So if you go onto our website initially and register, that means that when the case comes through from Crystal, they're able to then submit all of the case online on your behalf. So what they will do is they will go onto our portal and they will submit all of the information that they've discussed with you in terms of a DIP. That DIP information comes over to us. Now, there may be an instant decision given back to Crystal in terms of whether we accept that. If the DIP actually refers or declines, then our underwriters will pick those cases up. So any referred or declined DIPs are picked up then by an underwriter who will take a look at the information, and they'll go back to Crystal with a decision on whether or not we're able to help with that particular case. There's then a checklist of items that's required, so Crystal will work with us to establish what's needed on that case. You will then supply Crystal with all of that information, and all of that information is then uploaded to our portal for our underwriters to take a look at. We do really try to encourage all of the documents to be uploaded at time of submitting the application, just to make sure that the case is being looked at in its complete manner, in terms of the underwriter being able to make a full assessment of the case on that first underwrite. That's really, really important to make sure that we can get cases through as quickly as we can as well, with no delays. There is also tracking systems as well. Crystal are able to speak directly with our underwriters and have any conversations with them about the case if that's necessary. So everything is done all online on our system, and you will have the support from your account manager at Crystal Specialist Finance. So finally, I'd just like to end by saying thank you. We really appreciate you taking time out of your day to log on today and listen to this webinar. I'm hoping that you found it useful, and hopefully you've taken something away today that maybe you didn't know about us. But really what I'd like to finish on is just to say that we are a flexible lender. You know, any cases that you think may fit, then please get in touch with Crystal to discuss those. And also cases that you may think that don't quite fit our criteria, but maybe we can take a view and it's a strong case. Again, please feel free to pick up with the team at Crystal, and they'll be able to discuss that with you and let you know whether or not we can help. So thanks again everybody for listening.